Hey my fellow traders, welcome back to my channel where I teach you how to swing trade the stock market using technical analysis along with my 30 years of trading experience. I'm Ryan Mallory, and we're going to talk about buying the stock market dip. We had the worst week in the stock market since February. Should you be buying the dip? Should you be taking a more conservative approach, raising some cash? We're going to talk about that and more. But first, make sure that you like and subscribe to this channel. That way you can get all of my notifications and updates when I do a new video. You probably lost a lot of money this past week. I mean, it was rough. The S&P 500 was down 1.7% in 5 straight days. The NASDAQ 100 was down 1.4%. The NASDAQ Composite was down 1.2%, which is interesting because the NASDAQ Composite composes of all the NASDAQ stocks, whereas the NASDAQ 100 just composes of the top 100. That means that your FANG stocks were showing a lot more weakness this week than the NASDAQ as a whole. Then you had the Russell 2000 and it was down 2.8%. And that's not too surprising because your small caps are usually much more volatile than your large cap stocks. So to answer the question of whether to suck it up and just buy the dip, we really just got to dig down into these charts. Now let's start off with Apple here because you had a big sell-off these last 3 days, but most notable was the selling on Friday, and it did come off on some news about a judge that was ruling against them in regards to their App Store. And what you're going to see here is it broke this rising trend line here going all the way back to the June lows. And that's a decisive break. Now it's going to be interesting because a lot of times you will see in technical analysis, especially of late where there's so much Fed accommodation, where a key support level will break and then the next day you think, okay, it's time to get short, but the bulls step in and buy it right back up. That's the whole phenomenon with buying the dip. No matter what the technical image is, the dip buyers step back in. And no matter if it's a head and shoulders pattern that's just been confirmed, the dip buyers step in and they put the stock back on track. So on Monday, it's going to be really interesting to see, can the dip buyers step back in and get it back above this rising trend line right there? And if it does, then really what happened on Friday is a wash because the dip buyers will probably send it back up to all-time highs. Now you have a couple of key support levels that I also want to highlight here as well. First off, you have this support level here, clear break on Friday, but it's also part of a bigger range that took place from most of July and August. And right now, that range is being tested. Very good chance that we see the bottom part of this channel get tested on Monday and then see that bounce that perhaps takes it back above this rising trend line. So there's a lot going on with Apple. I do think that how Apple and the rest of the FANG stocks go is going to largely determine how the rest of the market goes as well. Now here's another chart I want to show you, not because there's anything major going on with Microsoft. Yes, it broke below the 20-day moving average back on Thursday and held it on Friday. However, check out how there's like selling 10 out of the last 13 days. But has it really made a big impact on the stock? No, not really. I mean, you would think that a stock that has seen 10 out of the last 13 days of downside would probably be down anywhere between 8 to 10%. But that's not the case here. In fact, the all-time highs is around 305 and it's trading at 295. So it's only down about 3% off of its all-time highs, which is a real strong measure of how strong this stock is. And even though when I look at Microsoft from a long-term perspective, like you see here on this chart, yes, we're in an absurd bubble, but that doesn't mean that the bubble is going to burst in the here and now. It could go on for another couple of years and get even more absurd. And that's the novelty of the stock market, that a lot of people think that it's supposed to make sense when it doesn't have to make sense. And instead, it can really rob you of a lot of your own capital when you expect it to make sense. And let me take a moment real quick here to tell you about my YouTube membership channel. You can click on it by joining below. You're going to get all sorts of really good stock market information. You're going to get everything from the S&P 500 to the NASDAQ 100 to the Russell 2000 updates on the regular each week, plus FANG stock updates each week. And you're going to get my weekly watch list plus daily trade setups each and every day, and the most intriguing charts and opportunities that I come across on a daily basis. So check that out. Click the join below and sign up today. Now you want to remember too, the Fed's very accommodating. So I don't say just like buy the dip blindly, and I don't think that you should just do it just because we're down. I think you got to wait for that market bounce to occur. And once that market bounce happens, then you can jump into the long side. But you want to be very careful about just doing it blindly. You want to see a little bit of a confirmation first. You want to see that the bulls are wanting to buy the rally. And oftentimes it'll come on a gap up. So if we gap up on Monday morning and the bulls run with it, then there's a good sign that, okay, maybe I can put some cash to work. It doesn't mean you put all your cash to work, but you can put some cash to work. Now let's take a look at the S&P 500. Are we below the 50-day moving average yet? No, not yet. We are below the 20-day moving average, but we've seen a break of the 20-day on a very regular basis on pretty much every pullback. And the one thing that happens when that does break, it automatically gets bought up. Sometimes it'll test the 50-day moving average like it did here, and then again on here and here and here, but it doesn't always. We got very close to it last time before we got bought up really fast. So there is a chance on Monday that we test this 50-day moving average and then we see it get bought back up. And so that's what you want to really look for. If we close below the 50-day moving average like we did here and then in here, what you want to look for is, okay, are we going to all of a sudden buy the dip? Or are we going to get that follow through? Because the one thing that's been missing through every one of these breaks of the 50-day moving average is a follow through day to the downside. We lack the follow through. And if we don't get the follow through, then it's very much likely that this 50-day moving average is going to continue to hold and see the bull step back in and drive the prices back up to all-time highs. Now, when was the last time we actually saw a 5-day sell-off turn into 6 days? We haven't seen that. We saw a 5-day sell-off back in October, but we haven't seen a 6-day sell-off since the beginning of the COVID sell-off, which was late February of 2020. And that was a pretty bad time there. We were shutting down everything. Nobody knew what to do. There was so much uncertainty. We don't have that uncertainty anymore. Yes, we have the Delta variant and a lot of things that people are very scared about right now, but there's less uncertainty as we're going forward as it pertains to stocks and as it pertains to future earnings growth. Despite it being the worst trading week since February, check out the weekly chart of the S&P 500. Is it really breaking? No. It's still above its 20-week moving average. It's still above the 10-week moving average. Yes, it did break below the 5-week, but there's no real technical damage. So until we see some breakage in this beautiful trend line really off of the COVID lows, there's no real sense of panic yet. That doesn't mean that things can't get worse here. That doesn't mean that the market can't start to sell off and continue to sell off next week and the week after that. But what it does mean is that at this point in time, there's no real reason for serious panic in the stock market. We had a down week, but a down week doesn't mean the end of a trend. Here's the takeaway. It's natural to feel uncomfortable with the selling that you got last week. If you're short the market, it was a fun week for you. But if you're long, like most people are, it was very uncomfortable, and it's easy to say, you know what, I'm going to take my ball and go home because I don't like these kinds of losses, especially if you're very new to trade. But what I saw last week is, yes, Apple struggled quite a bit, but I saw a lot more damage being done in the utilities and the staples and the telecom stocks, which are your more defensive stocks, which people tend to go to when things get worse. Those are your safety plays. Now, tech and FANG stocks have become more of a safety play of late as well, but utilities are still a safety play, and those got hit really hard, which tells me the capital isn't flowing to those right now, which makes me believe that there's not a real sense of panic in this market, especially when you're not seeing huge amounts of volume to the downside. We had a below average week this past week. Despite 5 straight days of selling, we were below average. And when you start to see the panic sell, you see huge volume spikes. So we didn't get that. The key forward is to know your support levels, know where your line in the sand is, know what you're comfortable with, and go from there. Don't get caught up in how you're feeling. Get caught up in what are the charts trying to tell you. And right now, the charts aren't showing a great deal of panic. If they do, then that's where your stop loss is, and that's where your risk management comes into play to keep the losses small. If you have any questions, feel free to post them down in the comments, man. I really like hearing from you guys. Tell me what your plan is for next week. How did this past week make you feel? And make sure to like and subscribe and to join my YouTube membership down below by clicking join. Thank you guys, and God bless.